Good afternoon, everyone. Welcome to Hit the Bid here on July 27th. This is Ty Robbie here with your Week 30 Market Watch. Today we're going to look back at last week's action, see what played out, and how it's going to help us navigate these markets as we head into Week 30. Also going to be checking out some big picture news events to be keeping an eye on this week, so let's jump right in here and take a look at our big board. We did see a couple markets pushing up into all-time highs last week. Feeder and fat markets continue to climb as this cattle market continues to show its strength. Equity markets pushing up into new all-time highs with each of our major indexes all seeing all-time highs last week. We are seeing oil prices starting to get a little bit heavy here, and something that we want to keep an eye on as we head into Week 30 here. And then a pretty quiet week over in the corn market, but we'll keep an eye on those corn prices as we head into the summer here. And so let's jump right in. For starters, we are going to take a look at our live cattle. October contract is first up. We did see rollover week last week as we did roll out of that August contract and over into October. Nice upside all week long across the cattle market. Prices opening up on Monday and pushing higher, making steady gains for the week. Did see that new all-time high printed on this October contract there on Wednesday at 223.90. We did consolidate on Thursday and Friday, but nice inside days here, putting up pressure on this 223.5 level, creating our bull pivot for the week ahead, that is. If we get some early bids above 223.5 early tomorrow morning, we should see this market kind of kick back into gear and head back up towards this 230 area. We could see a nice break above this top end of this uptrend channel line. In the event of breakouts above our bull pivot and this recent all-time high there at 223.90, we could see this thing start to climb out of this channel and take that next step up to this 230 level. However, at the moment, we do expect to see that upside continue. We do just want to be cautious after we've had about 3-4 weeks here of upside, picking up nearly $18 along the way since this recent pullback. We do just want to be cautious of any closes below these prior day lows, as that could get the ball rolling for a potential pullback. However, we expect to see any pullbacks be buying opportunities. Let's jump in and take a little closer look at our weekly action from last week. We have seen nice steady gains over the last 3 weeks here. Early last week, we did open up and pushed right above that prior level. This 220 to 221 area has been a key level that this market has been responding to over the last 3 weeks here, keeping the prior 2 weeks capped, but last week we did see good support there above that 220 to 221. We do have the bear pivot down there at 220.5. It's just kind of the middle ground there of a relatively blurry line, but we do see this level here. In the event of close below a prior day low, we do expect to see this 220 to 220 level tested, and then from there a close below would get us back into pullback territory where we could see price flush down here into some of our major moving averages. First stop is going to be this 20-day moving average right around the 218 level, and next up would be the 50-day average down there at 212.80. We will continue to see these prices climb in the week ahead on these moving averages, so in the event of pullbacks, we will expect to see dip buyers be supporting a couple of these levels down below as this big picture uptrend remains intact, and we expect to see this upside continue throughout the rest of the summer and into the fall. We can go down the line here and look at some of these back months. December pushing into new all-time highs last week as well, and a nice strength here in those early 2026 contract months as well. This market is rolling and showing good strength out into the next 6 or 7 months or so here, and we expect to see that upside continue. Jump over to the feeder market now. This market also followed the path of those fats last week. Nice upside breaking out early, pushing up to that new all-time high up there at 332.07 on this August contract. This was the front month for last week, but we did something we are noting here today is Friday we did see this September contract outpace the August contract in volume. So we expect to see in the week ahead this market starting to roll over into September, and this will be the focus from here on out. So we'll be focusing on September, but we are just going to review last week's action here on this August contract. Did see a nice breakout here from Monday morning, pushing all the way up into those highs there on Wednesday at 332.07 on this August contract. Similar story as those fats, nice breakout from these prior 2 week highs, lots of resistance over the prior 2 weeks between this 326 and 327 level. This market was able to get a nice close above it there early on Monday, continuing that push on Tuesday and Wednesday, balancing out and having a nice strong close here just right near those all-time highs on Friday, showing the bulls are strong and looking to carry this momentum into next week. We expect to see early bids above these bull pivots to carry this market higher and really show a nice break and take a next step up to the next level here above this big picture uptrend that we've had, breaking out of this top line here, and we could see this thing start to just take another step up here and start heading towards the 340s. Let's take a look at September, though, as we are looking to focus on this one as we head into next week. Real nice level here at 326.5. This is the key level we talked about breaking out above on Monday, those prior 2-week highs. We do want to see this market continue to support this 326.5 level, and we should see this short-term uptrend continue to climb. This big picture uptrend still remains intact, so even in the event of a close below prior day's low or this 326.5 level, we expect to see prices find support between our 20 and 50-day moving averages. We do have a pretty wide zone here, as this market has made a pretty impressive climb off the last bounce off the $3 mark. We do expect to see support step in. We'll just have to wait and see how that unfolds. But as at the moment, we do expect to see this bullish momentum carry us into next week and really get a nice breakout and continue this market grinding higher. We can go down the line here. These September, October, November contracts all putting in new all-time highs there on Friday at the close, showing a good strength for this fall feeder market. And even out into those early 2026 contract months, those all-time highs were put in on Wednesday, or contract highs were put in on Wednesday, but still good upside as we look out into next spring as well in this feeder market. Down the line, both feeders and fats looking strong. This cattle market remains very impressive, and we continue to expect this upside to come. Even in the event of a pullback, all dips are expected to be buying opportunities from here on out. We'll continue to monitor that situation as we head into the new week. Over to the corn market now. We did see this December corn contract making nice downside early in the week. Early selling pressure pushing it down here to 415.75 at the low of the week. We did see price kind of stall out there late Wednesday, Thursday, Friday, and just kind of get comfortable there in that 417 to 421 area. We can take a look here on this lower time frame. Most of the downside was contained to Monday and Tuesday's action. A brief dip below it on Wednesday put in the low for the week, but then we balanced out here between this 417 and 421 area. We can see a nice concentration of volume here compared to the last few weeks, building up a good amount of contracts here in this about 4-cent area. We expect to see breaks below 417 next week. Offers below 417 should keep this downtrend rolling and have this market heading back down here towards new contract lows. But in the meantime, we could see this market just kind of get choppy and cross back up here into the 425 to 430 area. We have plenty of overhead resistance here. This gap holding this market lower from last week's rally. And we expect to see anything from this 430 to 434 level continue to be resistance with this declining 50-day moving average, this overhead supply gap, as well as this down trend line. We expect to see plenty of resistance keeping this market capped around this 430 level. In the event of rallies up into this area, that's what we expect to see. The bears get aggressive and start selling again back up here. However, we do have this downtrend intact, and offers below 417 will just have this thing pushing down towards new contract lows. If we take a look back, this overhead spot here between just right around the 430 mark, the line's a little blurry here as well, but plenty of this prior support now turning into overhead resistance over the last few weeks here, so we expect to see this market capped in that area and the downside to continue. Look for these corn prices to continue getting cheaper. Next up, we've got the crude oil prices. Like I said earlier, this market is starting to get a little heavy. We, following this recent blow-up volatility during the Iran situation and that short squeeze, we did see this market starting to put some pressure down on this 64 to 65 area. Good support just coming off of this big sell-off here, pushing up, finding resistance shy of that $70 mark, and price just steadily chopping lower, real tight ranges, low volatility here so far in this crude oil market, as we do know this market is comfortable here in the 60s, but last week we did see selling pressure and the bears closing this market down here just above 65. This finishing move here on Friday, coming off that opening range, cutting back the entire week's range and closing near the lows, as a sign that the bears could mean business as we head into next week. We do expect to see a little bit of that follow through selling come down below 65 as we head into the new week. However, the line to beat here is the $64 level. We could see the bulls continue to support this and see this market just start to or continue to carve out a range here between 64 and 70 bucks. So we do need to get a confirmation and close below the $64 mark to really confirm this next leg lower and get this downtrend rolling. And we'll see prices in the event of closes below 64. We'll see price get marked down to 60 and then potentially 55 from there, as we could start playing around in this range in the event of that. This market is feeling heavy, but until we get that close below 64, there's not a whole lot of conviction from the bears, and we could just see a continued chop here in a very quiet, low volatility market right now. Last but not least, let's check out our equity markets. Each of our indexes pushing up into new all-time highs last week, showing this market continues to be very resilient and strong. Good environment right now for the stock market. Did see the S&P up there closing just near an all-time high. Up there at 64.31 with the close coming in at 64.28. Nice breakout last week. We took a little bit on Monday and Tuesday to toe this line here at these prior 2-week ranges. If we take a look on a lower time frame here, we can see how this market was kind of stuck in this range between 62.40 and 63.40. During this time, this market just continued to carve out. Early last week, we did see a nice initial break on Monday, but they weren't able to close it yet. Flushed back down below it on Tuesday, but finally got that decisive move on Wednesday, pushing this market higher and getting a close near the highs. Zoom in a little bit here, and then just a continued drift higher throughout the rest of the week with this bull closing this, with the bulls closing this market up here near all-time highs or at all-time highs. Suggesting this market still has the momentum and the wind at its back, and we expect to see this continue marching higher. We are seeing some pretty overbought levels here at the moment, so pullbacks are to be expected and would be healthy for this market at the moment. But right now we do have this momentum continuing to drift higher. We do expect to see any dips be buying opportunities from here on out as this market remains strong and healthy, and we expect to see this trend continue throughout the rest of the summer and into the fall. Nasdaq also closing near the all-time highs here this last week, continuing to just make a nice steady gain over the last 3-4 weeks here, drifting higher. The Dow has been the weakest recently, with the most recent pullback to the 20-day average, which the Nasdaq and the S&P have not seen that in a little over a month, not since the Iran and Israel situation. But the Dow showing a nice pullback here to the 20, good support. We're seeing multiple tests of this 45,200 area, new all-time high printed there on Wednesday. But lots of these touches up here around this 45,200 level is just telling me this level's begging to be broke. Nice rally early this week above 45.2 could really get the Dow names rolling and throw a little extra added fuel onto the fire for this S&P and Nasdaq index as well. Look for that upside to continue in this very strong market. We do have some news events that we want to be aware of. It's going to be a busy news week. The focus here is on the Fed meeting that we've got on Wednesday, interest rate decision and FOMC statement coming out on Wednesday at noon Mountain Time, 2 o'clock Eastern. We also have some important jobs data to keep an eye on. Wednesday morning before the open, we do have non-farm employment change, as well as non-farm payrolls on Friday before the open, and then jobless claims Thursday morning before the open as well. So lots of big information, big news events sprinkled in throughout the week, so we do want to be aware of those, as those could be volatility-inducing events, so we just want to be aware of that and keep an eye on those news report release times. So that's all we got for the week. We'll expect to see more upside across this cattle market and equity markets. Good, nice, strong uptrends here at the moment. We can see this thing keep rallying. Pullbacks would be healthy for these markets, as we do want to see dips come in as good buying opportunities. Keep an eye on this crude oil market for potential breakdowns, as this market is getting pretty heavy. And wait for this corn market to really get some momentum before we start committing to anything here. So that's all we got for week 30. We'll catch you tomorrow night for closing comments. Have a good night.